Greetings, everybody. This is Jeff Scott. This is my weekend review for April 3rd, 2016. I've entitled it, The Bulls Keep Pushing On. This past week was a very strong week in the market. The prior week was a breather. Perhaps that breather was an opportunity to work off some of the overboughtness, if that's even a word. But like I said, this past 5 days in the market were quite strong if you were long. My email address is hgsidoc@gmail.com. As always, this is for education purposes only. Any recommendations are in the spirit of education and should not be considered investment advice. I say this somewhat half-heartedly. I am a doctor, not a broker. The part that's half-hearted is that most physicians lose money with their investments, so take anything I say with a grain of salt. I am not affiliated with any trading companies, investment software, or trading gurus. Everything that I show you, I've paid for by myself. Nobody pays me anything to say good or bad things about them or anybody else. And trading involves risk, and you alone are solely responsible for any investment decisions you make. I like to tell people that I've married two styles to create my own style. I'm broad-based in CanSlim, which I learned from O'Neill and others, made better by Morales and Katcher, and then made electronic and taken to another degree by Ronald Brown and Ian Woodward with HGSI. Then I married that with the teachings of my friend, mentor, buddy, the guy that makes me laugh more than my wife, John Person. He's an author of some great books. Several of you have had the opportunity of learning from him as well. He's really helped me understand what it is to trade, not just to find what groups are working, what stocks are working, but when is the right time to take the trade and what should the trade look like. I blend in a little bit of Van Tharp for position size and money management, which is very similar to what John teaches. And then my buddy in the lower left-hand corner, my friend from Canada, George Lee. I have lots of different software. I limit what I show in these webinars to mostly TradeStation or Thinkorswim, HGSI, maybe some EdgeRater screens. And if I do seasonality, I can pick one. Magenta Trader is web-based. Seasonality Trader is I guess it's Java-based. And Best Choice is more of a traditional program. The point of that is that I can put Seasonality Trader on every one of my machines, so that's usually why I pop it up here. Best Choice does not reside on this. You have limited licenses, and this machine I only use for these broadcasts. And Magenta Trader, it's no issues with the program. It's still got some growing to do and some needs of expansion of its capabilities, but it's a good product as well. Stock patterns are cyclical. Where are we? You tell me. I feel like since May of last year, I've been a broken record where we've sort of truncated this typical pattern and we just chop around. Now, we've just been in this part of the pattern where we've had a great move, 10, 12% in the indices in the month of March. Now we're in April. Do we continue up or are we going to get into more troubled times? I think time will tell. Don't listen to me. Don't listen to anybody on TV. Watch your charts. Figure out how you interpret the market, and that's what you have to respond to. Nobody can tell you what the market will do tomorrow. Yeah, right now the futures are flat. That's good for right now, but who knows what they'll be like in the morning, or better yet, what the market will be a week from now. And then once you determine what you think the market is doing, how do you play the market? I could tell you I've used this run up to get rid of laggards. I'll continue to get laggards, get less positions. I'm way in the market. I did a couple of shorts, which smacked me in the ass, to put it mildly. As I was testing the water, as I guess Gil sometimes says, I'm uber long right now, but I have less positions than I may have had 4 weeks ago when this bull run started, and I'll continue to be cautious. But I have to be long because until otherwise proven, this market is either in a bear market rally that's been ferocious, which is not that unusual, or we resume the bull. On Friday, this is our sectors. I know it's hard to see where you are, but let me just point out this is all about looking for a pattern. All red in energy, that's a pattern. Red energy came off significantly last week. It'd be interesting to see if we get a bounce this week, or are we going to go back and revisit $30. We got up to 40, and then the energy complex started rolling over. I think a lot has to do with the whistleblowing and screaming out of Saudi Arabia. Are there soft targets in production caps, or are they just going to pump all day and all night long? I mean, it seems to me like they're going to pump all day and all night long, which means the oil will continue to be cheap. I've certainly nibbled off the bottom. I still have some positions, and I think long term, I think oil will be great. But frankly, I did use the last couple of days to lighten up on some of my longs, get rid of the weaker ones, and kept the ones that I want to be with longer term. What's interesting, social media over here, the Twitter, the Groupons, the GoPros, the Yelp, Baba, Yahoo, Zynga, Zillow, Baidu, all were in the red. Let the big fellas. Google was up $6, which is less than 1%. And then somehow Facebook sits over in technology. I don't know where Facebook should be. To me, it's the ultimate social network stock. But Facebook was up 1.7%. So perhaps the smaller also rans of social media just rotated into Google and Facebook. If I look at the markets on a daily, you could see Friday, you can see this sort of a bottom tail here, in that the market actually traded down on the jobs report and then had just a ferocious move up and closed at the highs of the day. And you can see this really massive rally that we've had since really the middle of February off the low here. Similar picture, that was the S&P. This is the NASDAQ futures, and the Dow futures all look extremely healthy. Now, the Russell futures had a great week, and they too are fairly strong off the bottom. Unlike the other three on the daily, they have the 200-day that they need to get through, which may or may not be an issue. Now, the VIX is slammed. The VIX is trading at just off of its lows on this chart. It's been lower historically. We'll look at it again in the HGSI charts where I get you more space. And the dollar is languishing here. Dollar looks like, frankly, it's rolled over, which, by the way, is not necessarily bad for the U.S. stock market. On the weekly, I guess to me the big deal here is, and I'll draw these when we get into HGSI, we've sort of broken out from the descending trend lines. And we've broken out with the vengeance. And this is, again, the ES, NQs, YMs, and the TFs. And you notice how we've broken above the 200 weekly here. Other things that are of note here is that, let me go back one. You notice that the 17s have crossed over the 200-day moving averages. The 50s have turned up. And we may get to that golden cross in the next couple of weeks if this market continues to stay steady or continue to go up. Another potential bullish sign. When I look at my Trade Navigator, a couple of things I just want to point out here is we're still in daily buys in all indexes. On the weekly side, we're still in weekly buys. You notice the seasonality starts to, on the NASDAQ, starts to weaken here. Now that is something we'll have to see. One of the things I like about Genesis is I can put the seasonality right on the chart. I know you can do it with Thinkorswim as well. I've had much more experience with, I can't say difference in success, using Trade Navigator. Rates. You know, it's funny, everybody gets nervous when we have good economic numbers because the Fed's going to tighten. The Fed did tighten at the end of last year. And look where the rates in white did this past week. They just continue to come down. Now, some of that is probably, I have to respond to my wife's text. Some of that is probably coming down because Janet talked the market down. Perhaps the economic numbers this week were not overly strong, but the market is certainly not pricing in right now a big rate increase coming. Notice interest rates getting down. You know, this bar here at 1.7. I get nervous when we get below that level because there's usually some fairly profound economic weakness. I'd like to see us get back above 2, but for now, nothing here says rates are skyrocketing. How about AD lines? You can't see them real well, but the white and the yellow are sort of overlapping, and both on the small stocks on the 2000 and overall on the 3000 Russell are going back towards their all-time highs. I think I read somewhere that the S&P advanced decliner this week set an all-time high. The markets usually roll over when the AD lines are setting new highs. No. And then we look at overboughtness. If you look at stocks above the 200-day moving average, where I think we're about 36% or 46%, something like that. We are certainly way off the lows, but we're working off a really profound oversold, and you get overbought when you get up here. So longer term, we're still working off a pretty profound oversoldness. Yet short term, you can't really see it here. And actually, I guess it's on another chart, but we are near as high as it gets for stocks above the 40-day moving average. So overbought on the very short period of time. If you look at a 13-week, which, excuse me, a 3-month rather, I guess I called it a 4-month. It's really a 3-month new high, new low ratio. I'll have to change this slide. So, excuse me for 1 second. All right. If you look at the 3-month new high, new low, and you go back a decade, this is as high as the new highs versus new lows have gotten. We are basically at that point now. So, again, more evidence that we're short-term overbought. Yet the McClellan is not overbought. It's sitting down here about a little bit above break even. So my interpretation of what I just showed you is, as we've been over the last several weeks, we remain overbought in the short term, but we're in a much more oversold or less than we were condition longer term, and this rally could keep going. Another thing that I've learned is overbought markets keep getting more overbought in a bull market, and oversold markets in a bear market, frankly, keep getting more oversold. Buckets. This is the 24th. This is the 1st. You could see the number of stocks in the S&P 1500 above the midline of their Bollinger Bands has increased from 66 to 79%, as well as the number of stocks trading near the top of the Bollinger Bands. Certainly more overbought, but not an extreme. There's no Hindi in sight, no surprise. That would be a sign of a potential market risk, of a big correction. You need to be at new highs before I think we'll see this. And then I called this before a stealthy rally. I took away those words because it's been saying it for a month. This is the Woody indicator. And we look at the third set down here. And we buy when it's green. And this market has been since November showing us that there's been some strength. So despite the toughness in January, and this yellow here is volatility, with more and more volatility this year, we're still been in a from an index perspective, a bull run. Now, other good news if you're long, like canaries. Well, last week we talked about would they fail at the 200 and take out new lows, or will they rapidly retake it and take out new highs? Well, very bullish. Broke above the 200, retested, and is heading back up. The canaries are strong. That's probably a good sign that we might see further market strength. Again, we are in the late stages of this market, whether it's a bear market rally or a bull run. So there's no guarantee it's going to go on forever. All it takes is it would be a domestic-based thing that we saw in Belgium, and the market would change on a dime, God forbid. But right now, that's a green light. This is sort of causes some skepticism where you can see that the selling pressure from Lowry still far above the buying pressure. So, I have my daughter dates a guy that works for Lowry, and we had dinner today. We were talking about this again. If this is a bear market rally, this might be telling us that there's still a lot of risk here. So this might give a little bit of caution. Leaders chart, similar to the canaries. I put together a list back on March 6th when I thought this rally was meaningful. And I picked the stocks that were leading at that time. And I assumed that I would stay in this market as long as these leaders were leading. And we had a pullback to the moving averages, the 17 and the 8. But we ended the week strong with kahunas, mobile breakouts, and certainly a move back to at least retest new highs. Another bullish sign for this market. So, know your news and EPS dates. You could see it's a light week for both. We do have some FOMC minutes from March. We've already had a meeting since then, or not a meeting, we had the announcement since that time. So it'll be interesting to see what went on there. May move the market some. We've got some employment numbers, but the big guy, the first Friday, came out already this week. And you'll notice there's not a ton of earnings. Greenbrier, Stars, Monsanto, some of the solar companies, Bed Bath & Beyond, Ollie's, talked a lot on the canceling boards. So a couple of names that we follow, but not a lot going on from an earnings this week as we get closer and closer to the next earnings season. Market thoughts. The rally certainly boosted last week, was boosted as rates fell. As I said earlier, the prior week, the market gave up something. Perhaps it was a great week to let off some steam. But last week, the indices were up a couple percent. So it was a great week in the market for the bulls. As I said, we're increasingly overbought short term, longer term not. Rates are low. The interesting thing is when I look through charts, some of my most compelling charts were in banks and insurers, which would not be expected to be that way during a low rate environment. Utilities are near all-time highs. Now, does it really matter whether this is a bear market rally or a bull? You got to play the market you got. Right now we're in a bullish conditions. I'm long. I'm cautious, but I'm long. I can't tell you today whether that's a new bull or resumption of the old bull or if this is just a bear market rally, but I'll stay to the long side until the market tells me not to. Again, trade the market we have, not the market your favorite guru tells us we should have, and consider selling laggards. I always use run-ups in the market as a chance to get rid of old inventory, things that aren't working, and replace them with new things. I've heard so many times that things that led the last market do not necessarily lead the next market run. Usual agenda, after my comments, we'll look at the market, do some top-down analysis, some bottoms-up. Chart of the week, I know a lot of people like this. They don't always work. The last week's did not work. It didn't hurt you, but it didn't work. I look at hundreds of charts. I try and find a chart that really looks good from a technical perspective. I come up with my buy points, stops, and targets. I do this purely for educational purposes. If the trade fills, I take the trade, so I have actually something good to talk about. Sometimes I'll talk about how I use options. And I do this not to show off or do stock tips, but really just to show you how I think. Okay. So last week I picked Tesaro. I probably went 1 week too early to pick a biotech. I'll just put it mildly. You can read into that, and we'll talk more about that in a few minutes. Everything was green. It was right underneath the 200, which the red arrow there tells me is problematic. It had a kahuna a couple days earlier. It did have a pocket pivot that should have been a green arrow. And it had a couple of red candle highs. I liked it. I liked it because it had just had a high close doji on the weekly and super strong volume coming in on both the weekly and the daily. It was in a buy signal daily and weekly on John's stuff. So I come in, and I always do this, and I always try and put the lines on the chart for you. I set a buy at 48.50. My target was 52.55. My stop at 44.35, risking a little bit over 8%. Here's what happened. The stock max was 48.42. I said my buy was 48.50. Trade never executed, and it's now off. And hopefully, if you followed my numbers, regardless of me thinking it was a bullish trade, you never got executed either, never filled. So we'll come back to chart of the week. But let me just give you a little hint. We're going to talk about biotech. Now, before I jump out of my PowerPoint, John's website, John Person's website is personsplanet.com. Meant to do this before. I'm sorry. So hopefully I'll find what I want to show you. This is his planet. I'm a big fan of his. I think people know that. What I wanted to show you is that he has just announced a 3-day seminar event in Florida. This event will occur here it is, Saturday, September 24th and 25th, and then again on Monday the 26th for live trading. I will be speaking there. Now, I will be speaking there predominantly how I use John's tools. I will talk some of how I combine it with HGSI. The program costs are here, and so it's about $1,500 before the hotel. But what I wanted to point out here is that they had a special, which I think that's still going on. First 10 people get 2 free nights at the hotel. It's not a bad place to stay. It's real close to where I live. Here's the other bonus. For those who attend this program, I will do a 1-day HGSI Doc Unleashed seminar on Friday at the same location. The bad news is it's 4 days of work, of meetings instead of 3. But for those that want me to hear more about the HGSI tool, more of what I do, I will be heavily weighted towards HGSI, some with John stuff on Friday. And then Saturday, Sunday, and Monday, we'll be showing you how I use John stuff in my trading. So if you have interest in this program, especially if you want the hotel deal, I'd love to hear from you. And remember, hgsidoc@gmail.com, and I can hook you up. As far as the Friday session goes, I need 5 people to commit, or else I probably won't do it. And their charge will be nominally more than my cost, probably the $300, $400 at the max, unless I just do it at the clubhouse at my golf club, in which case, unless we play around the golf too, it'll be a lot less money. All right. Now let's go take a look at the markets. So again, I'm sort of a creature of habit. I do the same thing day in, day out. And what I start with is a couple of my favorite market indicators. So for those who've not been here before, there's 3 or 4 things on these charts we're going to look at. We're going to look at these green and red arrows. This is a daily, a weekly, and a monthly. And specifically, we're looking at buy and sell. Buy and sell. The second thing we're looking at is the color of the paint bar, of the bar. A green bar, is an Alexander Elder indicator that I like as sort of a confirmation. A green bar says it's okay for me to be holding or going long. A blue bar is indeterminate. I could be long, short, or holding. And I can only go short on a red bar or hold. I can't go long. The other thing that I look at are these dots here. The red dots here would be MACD divergence. Red would be bearish. If they occur on the bottom, then they're bullish, and they'd be a convergence. And I think that's enough for today. So real quickly, let's take a look. The NASDAQ. Buy, that's a buy here, and buy. So the NASDAQ is now in a buy, daily, weekly, monthly. Everything is green. You know, it is what it is. We're at 89% on the high jump, so not near the highest over the last year. Bullish, very bullish. Okay. The Dow Jones Industrials. It's been in a buy mode since the middle of February. Buy mode on the weekly. And it's now in a buy mode on the monthly with green bars. Bullish. The S&P 500. New buy mode came in on Tuesday. It's already been in a weekly buy and a monthly buy. Green bars. Bullish. It's had such a big run that the high jump bar is starting to be tested, but I ignore that because the fact that how compressed it was over the last couple of years, but that is something that does suggest that we're getting extended short term. But when I say ignore it, you see how high we've been up here. We're not even back to new highs. So I'm just going to take that one with a grain of salt. And then the Y IWMs reflecting the small stocks, green, green, green. This is the first time in months that I can tell you daily, weekly, monthly have all gone long on the major indexes. The cynic would say, now we roll over. We do have this MACD divergence again on the small stocks as we did on the Dow, not the Dow, I'm sorry, on the S&P. Oh, nope, forget, never mind. Thought I saw it on the S&P. Actually, it was on Amazon. So the small stocks, when we go back to them for a second, you see these red dots. That just tells me I'm starting to get a little bit MACD divergence. Notice we have a higher high and barely cracking the back of the midline of the MACD. That's not a bullish sign. This was the green dots showing me that I was near the end of the move down and having MACD convergence, and we did bounce. I guess the thing I would point here is there's often a period of time between the dots appearing and the move. Very quickly, let's look at sectors. Materials, green, green, green in a buy everywhere, very strong. Energy. Energy got weak this past week, so we know it's in a long-term sell-off where the XLE has dropped from over 100 down to 50 and bounced. Still in a sell mode. But on the weekly, it's in a buy mode, but shorter term, we pull back this week. So XLE, some short-term weakness. Financials. A new buy on the daily, bi-weekly, still in a long-term bear market or negative. Industrials, really in a nice run, buy. So industrials so far look perhaps even stronger or as strong as materials. Technology looks good. Staples have been leaders, and look at this. Now the one thing about the staples, notice we've got this MACD divergence showing up on both the daily, so we pull back, now we're getting it again, and on the weekly. But we're in a green arrow with green bars, very strong. Utilities, as I said, all-time highs. It's got some MACD divergences. Healthcare, new buy signal on the daily, in a buy on the weekly, still on a monthly sell. And discretionary, we've got some of this MACD divergence. So for the most part, take away energy, and maybe healthcare's got some weakness. Most of the sectors are doing well as well. All right. Let's jump into HGSI, and let's go into Woodward and Brown user groups. This is something that's provided as a service by Ron. Let's go to top-down view, which is only price and volume, heavily weighted to Friday. And let's see what's moving. Ranked by the combo rank, and I can see that the top are mid caps and small caps. Biotech. Biotech's been weak. Maybe this is biotech's time. And we will come back to biotech at the closing comments. Weakness, oil, dollar, silver, gold, commodities, volatility, all the things that are unrelated to the stock, well, to specific stocks, and it's often perform the opposite of the stock market, especially the volatility. So let's take a look at some major indexes here. Start with the S&P 500. We know from very quickly when I looked at the market indexes, there were no kahunas. So I'm going to take off the earnings and I am going to switch to a clean chart. So just to remind you what this has, this has candlesticks, like you can tell that already. On the top are my bongos. I have the, now I can't remember which is which, so let's open it up and see. We have the weekly bongo on top, then the daily bongo, two different derivations of the Hindenburg, which have not fired in quite some time. On the moving averages, we have the 200-day moving average here. The fact that some of the indexes are below and some are moving average above and some are below is confounding the high jump, which is why I threw it out, didn't count. But I got the 200 simple in red, the 50 simple in blue, the 17 simple in green, and this dashed one is an 8-day exponential. So last time we talked, and I said, or the last couple of times, I said we'll run up here, and one model would be that we fail, come back and retest. Frankly, that's kind of what I expected. However, as I learned from Ian often ago, a long time ago, you got to have a high, low, and a middle scenario. So when I first started doing this, my middle scenario was that we were going to fail down here after this doji and take out the lows. That was my low road. My middle road was to fail at the 200, and my high road was to go to new highs or somewhere between those. We are still in that mode. You'll notice last time I said we're not going to go straight up. We're probably going to go up. And if we come back and retest this moving average, that would be very bullish and move up. And that's exactly what we've done. So I'm pretty bullish looking at this with the caveat this has been going on a long time. Just give you an idea of how well this market has done. Let's take the lows here. Take them up to the high here, the closing here. We're up 14.5% in 34 trading days. That's a pretty good rally. So one thing I wanted to do that I should have done last time that I didn't was this. Now, we can play all kinds of trend line games, okay? Is the trend line from here? In which case, we're not quite at that. Or is the trend line from here? This is the one that I've been drawing. And this was, not only is it a breakout above the moving averages, it really is a breakout from this descending trend line. So I do think that this is a real move, and I'm still predominantly long, but I am smart enough to realize that we've had a big run already. And what is my maximum expectation? Well, I can't say maximum. I don't know what that really means. But I think that this has really got to be your target, which is your 200-day, your most recent high. And we're a lot closer to the high than we are to the low. This has been a surprisingly brisk and strong market. Those of you that actually follow the bongo didn't get in on the bottom, but you did get in as we broke above the 50, and it participated already 120 points of this move. All right, strong. Let's take a look at the Dow. Same thing. Onwards and upwards. And again, you know, I'm not the world's best trend line drawer, but is this a... Boy, that looks pretty good, doesn't it? Breakout. Take a look at the NASDAQ. Again, I don't know where I would draw it from, because if I go back to here, we haven't been here, but I could just as easily say that that's it, and we just broke out above that as well. And my target here, same story, that's pointed at the high. Draw a line and say that is potentially where we're going to go. That is another 10%. I mean, I don't know if I'm that bullish. That's a long ways to go. I mean, perhaps we're more likely to go towards here. But either way, those are very bullish targets. My stop has got to be kind of where that 200-day moving average is. I don't want to go back and visit that again. And then just for the sake of completeness, from the low here to the closing high up here, NASDAQ, 16% in 34 days. Is that a bear market to you? Only if you didn't go into the market, I guess. And then the Russell 2000, a similar pattern. And, you know, the challenge here is we're not yet to the 200-day moving average. So the Russell's the weakest. Yet, if I look at the Russell, it's up 18.6% in 34 days. So not really the weakest from a movement, but it's had the biggest drop. So frankly, had you been long from here and not sold out on the Russell. 27%. So we've made up some of that, but we still have a ways to go. Certainly was a bear market on the Russell. So I feel good about the indexes. Let's take a look at the dollar. Dollar struggling here. It's a downtrend. Volume has dropped, gone to daily and weekly bongos. So the dollar is in at least a short-term downtrend. The VIX, it's approaching the lows. It's not there yet, but it's getting pretty close, and it failed at the 17-day. A falling VIX is bullish for the market. A rising VIX obviously causes some problems. There are also sayings when the VIX is low, look out below. And the VIX is low. And clearly this is where markets start to, bear markets start or corrections start. But that said, it's not telling you it started yet, and I don't know when a correction is going to start. I just have to be aware that they're out there. Gold stopped at the 200-day moving average. I had a couple of gold stocks show up on my buy list. Weekly bongos still green, daily bongos red. Gold might be at a place to expect a bounce. And then silver, sitting right here where the 200 and the 50 come together. There's 20 cents between the difference there, so it's kind of sitting also at support. So what I would say at this point is the market showing a lot of strength. It's strong until it's not strong anymore. Right now it's strong. We got 171 industry groups, and we have 69 of those groups are to the upside, short term. Medium term, I've got 76 to the upside. I've got 19 to the downside. We're going to come back to them in a second. And on a more intermediate term, I got 22. So overwhelmingly to the upside. Before we look at winners, let's look at losers. Energy, services, exploration, midstream, integrated, refiners. So that's 1, 2, 5 out of the 10 weakest groups are from energy. Interestingly, with energy down, so are airlines. That may change Monday if you have a takeout of Virgin America by either JetBlue or Alaska, which is supposedly imminent. Yeah, I never know what to do. I think the whole world knows that that's going to happen, so it's probably priced in. But, I knew that on Friday, and if it happens and Virgin America opens up $6, when I feel like an idiot because I actually was about to hit the trigger and said, no, I'm long enough in airlines. So airlines were weak. There was a Deutsche Bank downgrade of the sector. Autos were weak. We had some auto numbers that showed perhaps not as bullish as people expected. Let's look at where the strength is. 2-day EMA up. Look at this, biotech, specialty pharma. Some of the ones that have been hurt the most have popped up. And you could see that the industry groups have just turned positive on the force within the last several days. Semiconductors, food, beverages. Let's take a look at the top 10 very quickly and see if we can find anything to buy. So specialty pharma. Let's turn on the super view, meaning I'm going to add to this. Same moving averages. This dark gray is my industry group. I got bongos in force and distribution here, accumulation distribution, high jump bar with a green candle low, and then I have a Bible gap up window, a squeeze window, and a MOBO window. Here is a pocket pivot window, and down here's volume with kahunas, and this is OBV and it's moving average. You look at Valiant, its 52-week was high as $263. It's now at $28. So it's down 72.4% since the beginning of this year and down about 90% from its highs. Wow. Is it time to buy? I think there's too much going on here for me to jump in it. But I do have a couple of shares just in case. Now what's interesting is, look at my weekly bongo. I talk about this indicator all the time. I was involved in its development. It's really designed to keep me out of bad markets. And had you taken profits when the bongo went red, you would have been at about $240. And it's stayed red since. So it's late to the party, perhaps. But boy, would have saved your buns in that one. So Valiant, I'm not jumping in here. Thank you very much. Acadia, this is one on my personal buy list. They had some great news on a migraine drug. They've been in their own little bear market. Nice bounce on Friday. They're going to have some resistance here. Everything turned green. Look at the OBV taking off. It's a story stock. They don't make any money. Let's bring in the fundies. Shire, similar looking chart. They're buying Bexalta. Yeah. Mallinckrodt, they bought the old Questcor, and have had some issues because of pricing like Valiant. Got taken down. Radius Health, some news. So look at this. This is our number one ranked group. Why? Because look at that one-day performance was 10.3 here. The one-day performance on Mallinckrodt was 5%, 1.7 on Shire, 2.5. But this is a group that's been clearly beaten up. Is this it? Is it time to buy these? It might be. Here's one that I owned before that I'm looking to get back in, which is Neurocrine Biosciences. But they're all the same. They're coming off of a pretty profound sell-off. The next group with similar findings is biotech. So here's why you want to own biotech. Regeneron had good news come out actually during the day on Friday, and it was up on the day 12.4%. However, if you didn't hear about this until the news came out, you probably didn't participate. Just jump into here. Just curious. All right, here's Regeneron. What I just want to do was come in here and drop this down to a 5-minute chart. Yeah, it basically, you can see we're in the stock on Thursday. It gapped open on Friday and just continued to run. So you would have had to have been watching the open of the market and had to take a flyer, which just continued to go up. All right, so Regeneron, is it too late? You tell me. It just broke above the 50. Mostly green up above, coming out mobile breakout and squeeze in a kahuna. No, it's not too late. I think this looks very interesting, maybe running up close to $500. Medivation, this one's in potential takeover talks. Broke above the 200 here, everything's green. It's based upon takeover more than anything else. Gilead, I almost made, well, actually I'm not going to say anything. This is strong consideration for stock of the week. It's nice little uptrend here since February, sort of stealthy, up about 12%. On Friday, big move, mobile breakout from a squeeze, everything turned green in a kahuna, up 2.5%. Amgen sitting right here at resistance, but had a nice move on Friday as well. Alexion, again, they're all very similar patterns as a specialty pharmacy. A lot of weakness, and then they had a big move coming in over the last couple of days. BioMarin, Celgene. All right. I could go through the whole bunch, but they all looked similar. Semiconductors. Micron, old name. Hard to believe this is a growth stock anymore. It was up 5% on Friday. Not my cup of tea, although it did have a kahuna. Everything turned green. Certainly a beaten down stock. Do like AVGO. I have a position in this one. Nice move here off of the 200. OBV is strong. Had a mobile breakout. Everything is green. I'm long this, and I still like it. NVIDIA, all-time highs. Hard not to like this one as well, but you can't be in all of them. Cavium, still below 200. Not my favorite of the group, but not bad. NXP. Infi, another one that looks a lot like Avigo and NVIDIA. All-time highs. It's got some earnings per share growth coming in the semiconductor. So unlike the biotech and the specialty pharma, at least these are actually breaking out to new highs. Packaged food, this is sort of the defensive play. General Mills, I don't know if this is all-time. Let's look at monthly. Yep. General Mills, all-time highs, pays almost 3% dividend. Certainly a defensive play. Mondelez, another consumer staple. Nice move on Friday, pretty deep pullback. No earnings per share growth, 1.6%. ConAgra was just sort of a saucer cup handle and breaking out. Had a kahuna, lots of green. Kellogg, all-time high, I believe. All-time high on Kellogg. And it, too, pays a dividend of about 2.6%. When your market's being led by utilities, Kellogg's, and other stock and General Mills, you can tell it's a very, despite the big recovery, it's still very defensive thinking. Same as with beverages. Coca-Cola, Pepsi, Dr. Pepper. Coke once was a growth stock. Let's go to a weekly and take a look. It was a growth stock here. And then over the last 5 years, it's sort of been a sideways stock. Is it starting to activate again? It's had a nice move since January. Everything is green, pays a 3% dividend. I think it's here because it's defensive, as is PepsiCo, 2.7% dividend, and Dr. Pepper, not quite as good, below 200 at 2.3% dividend. Precious metal mining. Nothing is above the index. Here's BVN, South American play. I've been in a couple of these that I've given you. BVN's had a big move off the bottom. Emerging markets have been doing well. The weak dollar will help a stock like this. 3% move on Friday. I think it's worth having a couple of these as flyers. Seabridge Gold, sort of a bullish flag here, or had a flat bull flag, broke out on Friday with a kahuna. Mobile breakout from a squeeze. Alamus Gold, sideways, then a breakout on Friday. These were a couple of my favorite gold stocks for the week. AEM, not so much. Large pharma, it's interesting. Pfizer. So I'll put these in the same category as the food stocks in some ways, in that they have nice dividends, 4% here. It had a 1.3% move on Friday. Doesn't look that exciting. It looks pretty weak, actually, although maybe if I'm an investor, not a trader, and I'm a long-term person, I'd be saying I'm buying it off of long-term support. So if you like dividends, if you're retired, if you want to buy safe stocks that you're not going to be mad at yourself if they go down because at least it was Pfizer, here's Pfizer at probably a good generational buy point. 4% dividend, $30 a share. BMS, breaking out perhaps. Nice leader in the new immunotherapy field. 2.3% dividend. And how about J&J? This is a weekly. Let's go monthly. J&J is pretty much at all-time highs. I think it's at all-time closing highs. So despite this lovely market that we've been in, although it has been lovely over the last 4 or 5 weeks, here's J&J near all-time high, paying a 2.7% dividend. Eli Lilly, not so much. Deep pullback, had a nice move on Friday, up 2% with a kahuna. Mobile breakout from a squeeze, 2.8% dividend. And Merck, in a downtrend, but breaking above the 200, 3.4% dividend, had a kahuna, mobile breakout from a squeeze, etc. So, you go back here and we look, you've got things have been beaten up, bottom fishing perhaps. Semiconductors have been leaders. Packaged food, beverages, and large pharma have been a story of defense. And then we had some gold, also could be defensive. Infrastructure software. Microsoft had a good week. As you can see, not at new highs, but looks pretty strong. All they had to do was give away Windows, and the stock became a growth stock again. Not my favorite stock, but it looks pretty good right here, doesn't it? All green. Just don't like the earnings per share growth. Oracle, a little bit of a flag. Everything's green up top. Fortinet, anything I want to jump in and buy? No. All right. And then lastly, number 9, e-commerce. This would be probably where I'm interested in fishing. Now, Netflix is alive again. It's alive. Now, it's sitting right at that 200-day moving average, and that very likely could turn into be resistance. This is a seasonably, typically strong time of year for Netflix. Its earnings are April 18th. It's had a nice move of about 30% in the last 37 trading days. Certainly could forgive it if it fails at this 200-day moving average. But with strength in the market, I expect it to blow right through. Lots of demand. Netflix has been a leader the last several weeks. Amazon. Amazon got hammered at the beginning of the year. It's now up 26% in the last 36 trading days. But from its prior high, it came down 32%. So it's still got a ways to go to retake its old highs. But looking at Amazon, a lot to like here. It is above all its moving averages. I have a position here. Earnings are the 28th. Vips, sort of a Chinese eBay flash retailer, broke above its moving averages on Friday with a mobile breakout from a squeeze. Everything is green. It's got some earnings coming in. This once was a high flyer, and they did something like a 7-to-1 split, and they've never been the same ever since. Boom. And then lastly, utilities. I'm not going to spend much time here. Most of them are either at highs or approaching highs. Duke Energy, 4% dividend. AEP, 3.3% dividend. Cleco, 2.9%, a laggard. Energy, 4.3%. PEG, 3.5%. Scana, 3.2%. These just have all been performing so well. So let's just go back that top 10. How many of these were defensive in nature? 1, 2, 3, 4, 5 defensive industries. 2 bottom fishes, actually 3 in healthcare. 3 in healthcare, though. Maybe that means something. And then I had the semiconductors, which have been leaders, and some gold in infrastructure, in e-commerce. Interestingly, number 11 is healthcare. Number 14 is healthcare. Number 16 is healthcare. Number 20 is healthcare. And then number 29th is healthcare. Anybody want to think that just maybe healthcare is about to take a turn? I do. But we'll see. Doesn't matter what I think. Let's go into all securities. Let's look at a couple of my favorite scans. Let's take a look at my stocks that are within 2% of free parking. So this is a scan that I'm looking for stocks that have momentum. The Kahuna Force is a momentum. They're above $2 at 150,000 shares. They're trading above their 200-day moving average. And they're within 2% of their 50-day moving average. So these are stocks that I like to buy historically. So here's a stock, big uptrend, pullback, broke above the 50, multiple kahunas, mobile breakout from a squeeze, still red on the weekly bongo, doesn't make any money. But this could have been on my list as an interesting biotech stock, or this is a healthcare medical device stock but another healthcare stock that's pulled back and looks like it's bouncing off the bottom. Dr. Pepper Snapple, move up sideways. Kahuna, forces are green, mobile breakout from a squeeze above the 50. Airgas a takeout. Don't care about bonds. Takeout. MFS. So the only one here that would be interesting to me potentially is Pacific Biosciences. Another one of my favorite scans are stocks that are squeezing, which are about to have a PSAR reversal. Wow, a lot of those. So let's look at a couple. So to be in the scan, you have to be in a squeeze, which is the yellow, and your stock price has to be right below the PSAR dot. And the reason for this is simple. I'm back to work. I travel. I'm on planes all the time. But I don't want to miss things that I want to buy when I'm on the plane. So I like to find stocks, and I'll find one that I'll work it up for you. Darden, a little above the 200. 3% dividend. We may come back to that. Moody's. I'm looking at one that I would potentially take as a trade. This one here. Okay. So here's a stock. Let's look at a weekly. Clearly in an uptrend, sitting on weekly support. Right below the PSAR dot, everything turned green, mobile breakout from a squeeze and a kahuna. Now, I haven't done a full workup on this, but this is a scan that I use to find stocks squeezing that are right about breaking out. I don't want stocks that are already broken out. I want stocks that are about to break out. Open this up. So I could see it closed at 66.89. The PSAR dot is at 66.97. So I'd probably put my buy price at 67.05. Now, where on this chart would be a natural stop? I can see 3 or 4 of them. I might look at the lowest low in the last 4 or 5 days. So let me just remember here, I'm buying the stock at, actually, let's do it this way. No, I want it. Sorry about that. I want this. So I'm looking at, if I'm working CBOE up, I'm looking at CBOE, buy if breaks above PSAR at 67.05. Okay. Potential stops. So I look at a couple. I might look at the lowest last 4 bars. I might look at that red at that 200-day moving average. Or I might give it more lean and look at that third one might be the 50 SMA. So we look at what is the 200, what is the lowest bar, what's the 200-day moving average? It's about 64.50, 64.45. The 50-day is at 63.95. And the lowest bar in the last 4, 64.60. I put it at 64.60 would be my stop. That's not what I wanted. Sorry about that. Then I look here, and if I take this stop here, would be do some math here. So we have 67.05 minus 63. 0.95 equals $3.10. Now if I divide that by my buying price, which is $67.05, it tells me that I have what kind of a risk. I get my calculator, so I get it. Should be about, looks like 4.6%. And there's my trade. So I would basically put a buy stop in when I get on. If my buy stop sets, I put in my stop here. My target would be 310 on top of that, which would be 67.60, which is a 1-to-1. And my plan would be then to put a buy. Wait, so that can't be right on my, hold on a second. Hold on a second. My target is 67.05 plus 310, which is 70.15. So I will have put on a buy if it trades, takes out that PSAR dot, immediately putting a stop in right here, which is about a 5% risk, and setting my target up here. And then if I hit my target, I take half off and raise my stop to break even and let the rest run. So I love this scan. I found the stock, and the fact that it's squeezing and usually and below the PSAR dot usually means that I'm not extended and I'm not taking a lot of risk. Paychecks, Cintas. Here's a big growth sideways, sitting right on the 50, right below the PSAR. Had a kahuna on Thursday. This is another one that I might be looking at for that type of a trade. There's a big moving art REIT going sideways. Looks like it wants to go again. So I think you can see why this is one of my favorite scans. So top-down investor looks at the market, then he looks at the leading industry groups, and then he finds the best stocks in those groups. Then I do a couple bottoms-up scans. Let me show you some of the stocks that I liked this week. So this long list were stocks that made my buy list. So let's just look at industry groups. Some biotech, some healthcare services, some insurance companies, REITs, number of different things that made my list. A bunch of specialty pharma. So these made my first run through, and it'll be stocks that I put into, for example, I haven't reset everything since I changed computers, and I only use this computer for this program. I think I said that before, so I don't update everything. But I put all these stocks that are my buy watch here, and then I monitor them during the day, looking for new breakouts and new signals. You learn a lot about that at the John Person seminar that's coming. So these are the ones that made it through my filtering. First one is Activision Blizzard. Pullback to support, broke out on Friday. Earnings per share growth coming in. I like this on my TradeStation indicators as well. Here's a bank that I liked, Western Alliance Bancorp, broke above the 200. Everything turned green. Gilead, we'll talk about in a few minutes. Innoviva, this is a small biotech stock, actually pays pays a dividend somehow of 3.9%, which I don't know anything about this company. I see it has earnings, which I like coming in. That excites me. But what I really like was, here's a stock that was beaten up like many biotechs. It's had a lot of reverse splits, so I don't really know what's been going on here. But I'm going to look at the daily, and what the daily tells me is we're coming off of a base. We're breaking out of a squeeze. Everything is green, pays a dividend in Oviva, and it has enough shares that you might want to trade it. MasterCard, breaking above the 200-day moving average with a pocket pivot. VIPS, we looked at already. Universal Health Services is a healthcare facility about to break above the 200-day moving average. Hillrom Holdings, similar pattern, medical supplies. Facebook, it just keeps on running. Varian Medical Systems. This is another one that I struggled with as to be a potential chart of the week. Certainly in an uber long trend, uptrend, with pullback to major support on the weekly. On the daily, you could see it breaking out above the 200. Out of a squeeze, everything is green. Almost gold, I already showed you. Here is a REIT. Why I like this one, let me see if I can remember why. Well, it's obviously in a long-term uptrend, have pulled back in a little flag, and it looks like it's running again. Everything is green. Huge volume on Friday. Pocket pivot. Great earnings per share growth. 3% dividend. Abercrombie & Fitch, one I've been long personally. Nice little uptrend here since last summer. Sort of a bear flag. So this one is actually one of those near PSAR reversals. If I'd gone further down the list, I probably would have seen it. Here's that Acadia Pharmaceuticals I pointed out. Vanda is another cheap biotech or health biotech stock, destroyed. Big bounce over the last week with 3 kahunas in 5 days out of a squeeze. Everything turned green. Like that pattern a lot. Altria, another defensive play. Tobacco, 3.6% dividend. So these are the ones that made it to my high probability list. So now let's jump back to my PowerPoint and let's go back to the chart of the week. So as I said multiple times, this is for education only. Trading, especially if we go into options, which I'm not planning, carries risk. I do not warrant these trades. I take the trades if they execute so I can discuss. And I'm doing this not to provide stock tips, but to openly discuss how I take a trade. Thoughts on biotech? It's been a major laggard in this rally. We saw some moves at the end of the week, and I think it looks compelling. So here, a lot of people ask me, because they know I'm in the healthcare industry, and sometimes I don't talk much about individual companies because I may have confidentiality agreements. So let me give you some overall thoughts. Why you want to be long biotech. The science is exciting. We're seeing new life-saving developments in cancer, great treatments for RA, multiple sclerosis rather, and even potentially muscular dystrophy. Historically, they perform well even if the economy slows down. They've sold off hard, and some of them are at compelling buy points. And Obamacare, officially known as ACA, has stimulated growth as the number of insured have increased. The cons. Political headwinds as price increases have been targeted by both the left and the right. Clinton even identifies Valeant as a target by name. Then you have individual name risks. Instead of just worrying about earnings per share dates, you need to know about upcoming approvals and denials, scientific presentations, publications, and investor conferences. And then here's sort of my why I'm okay being long. Despite all the political bickering, Congress passed legislation in 2003 that forbids CMS, which is Medicare and Medicaid services, from negotiating drug prices. So Hillary can bitch, the committees can bitch, but they themselves voted them out of the drug price negotiating business. Thus, it will take an act of Congress to change the current paradigm. When this happens, and it will, there'll be a major PE contraction in this space. However, think about Congress and maybe sometime before they have the will and votes to act. And oh, by the way, the drug companies, the biotech companies, we have a word for them. They have lobbyists, so we shall see. So let me show you some of my thoughts about the risks. Sometimes things happen and you have no idea they're coming, and then you only have you alone to be blamed. Celgene, if you think about last year, Celgene had peaked at about 130, 140, and it was making a big recovery, sort of, to lower highs. And I remember being in San Francisco in January on this day. Looks about right. It traded back. Actually, I think was it the 15th? All right. It's one of these days. I think it's this. It may have been this day here. Well, it traded back up into its moving average early on, and then it presented at the J.P. Morgan Healthcare Conference in San Francisco, and it ended up having a 4% move. One of these days, it had just a huge move downside, 6% move downside. Why? Because the CEO, for the first time ever, talked down his number. Not an investment, not a healthcare conference, not a call of their investors, but at the J.P. Morgan Healthcare Conference. So had you been long Celgene that day, you would have had no clue unless you knew all their conferences and then predicted that it would sell off. How about Sarepta? Sarepta makes a drug for muscular dystrophy. There's one of the, I think a few others more frightening things that your kid could have or a loved one could have than muscular dystrophy. Because you think about it, we've never had much in the way of treatment for this debilitating, life-affecting, impacting disorder. I had a position in Sarepta. Fortunately, I bought my position off of this here. So my cost was, I guess, it's somewhere down here. And I'm thinking I'm pretty good because it ran up to 26 to 40. And then I noticed it pulling back, but I bought this because I figured their approval is a binary event. If the drug gets approved, it goes up to 80. If it doesn't get approved, it goes down to 10. Now, I know that its PDUFA date is because it's published, and I know that around this, where my arrowhead is, when, over here, actually it was 1, 2, 3, here, is when the government is supposed to act on its approval. Well, it turns out I'm sitting in Phoenix at work, and I get up, and I turn on the pre-markets, and it's opening up at about $15 a share. And I'm thinking to myself, how could that have happened? They haven't ruled on it yet. Well, what happened was the FDA, a week before they were going to meet, released its briefing documents. And in their briefing documents, which they share with their committee members, these are independent people that help decide to approve or not approve and give a non-binding recommendation. In their minutes, they basically hammered the drug and the story. The stock sold off, and it fell in half again. Now, I still like the story. The binary event's not over. I held on to my position, and it's moved back up to 20, so I'm kind of at break-even area. And now we're getting back to a month or so out from that decision. So I have to decide what to do. Now, what's kind of cool to me, or not cool, scary to me, is if I go in here and look at Sarepta. All right, let's try again, Sarepta. All right. Notice and the whites are the monthly options. Notice how the volatility on these options jumps somewhere between the 4th week of April and the 5th week of April. That's because that's when the FDA is supposed to rule. So this is sort of an interesting play where the stock is $20 and it's projecting a 12 plus or minus $12 or take a look. A $20 at the money call, you're going to pay $6 because of that volatility. That means you're paying 30% of the stock price because of the high volatility around an approval event. You need to know that. Let's take a look at Heron Pharmaceuticals. Heron has a new, sort of new antiemetic for cancer. It's an old drug in a new delivery form, which sounds pretty exciting. And it was sitting over here the same day, pretty much, or actually, is that the one? About this time. And everybody's waiting for the FDA, and their PDUFA date comes, and nothing happens. Actually, I think the PDUFA date story was back here, where I'm at here. Their date for approval, and then the information came out, and the FDA said they didn't have enough time. So no one knows what that means. I've never heard of that, and the stock sold off. They have a new PDUFA date this week, so let's take a look at HRTX. So they're predicting a plus or minus $6 move in the next week. So let's look at a at the money call that expires in 12 days. They want $3.50. That's a 15% premium on the current price. So, and then lastly, Regeneron. Here's what happens when you get positive data. So it's not just about M&A activity, and it's not just about earnings dates. You have to know what's going on with the company you're looking at, especially there are these small companies with one product. So I'm getting long-winded. Let's just finish this up. Here's the IBB. On Friday, it crossed above the 50-day moving average, had a pocket pivot, it had a kahuna, mobile breakout and a squeeze, mostly green here. The weekly bongo's been tough for a long time. Over on my person indicators, we had a new PPS buy on the weekly. We had a buy on the daily on Thursday. The OBV is rocketing up on the daily. It's trending up on the weekly. You can see it's coming out of a squeeze. I think the IBB is ready to move, and I'm looking at things to buy. I've shown you all of these stocks here, ACAD, Gilead, Inva, Ver, and Vanda. I decided to work up Gilead for this broadcast. Gilead is a phenomenal country. We should all send them a thank you note because this is the company that has come up with the life-sustaining, not necessarily curative, but life-sustaining treatments for HIV. It's because of this company that HIV is no longer on the front page of Every Day with quilts and all the thousands of young people dying. They're also the company that came up with the cure for hepatitis C, but since they priced it at $100,000, they became a whipping boy for Hillary in Congress. Their earnings per share growth are struggling as they reach probably near peak sales on their hep C drugs, and everybody's looking for the next catalyst. That said, it trades at a multiple of less than 8, which is quite low for a biotech. It pays a dividend of close to 2%, and they're sitting on a ton of cash and are looking to make an acquisition. An acquisition could propel the stock. So I like the technicals, a move off the bottom. I like the kahuna. I like the mobile breakout. I like everything being green. I then look at it on John's indicators. Again, a high closed doji on the daily with a new PPS buy. A PPS buy last week. Look at the OBV rocketing and rolling here. So, if market is strong or stable, I'm looking to go long at 94.40, target 1 at 98.20, stop at 90.60, risking about 4%. My hope would be to take off half at my target, which is the green bar, roll the second piece up to break even, and see if I can't get a little bit of run out of this. Again, for those interested in the PUG group, this is a user group that I lead with John, that for owners of his indicators, as well as open to those that also use HGSI, but HGSI plus John's indicators, not HGSI alone. And we don't charge for that, but you have to use those indicators. And just to remind you, as I said earlier, that John and I will be doing a seminar September 24th, 25th, and 26th, personsplanet.com. $1,500 there or so, but you get 2 days free hotel. And in addition, for those that attend at a fair price, I'll be holding an all-day HGSI seminar on the Friday if I can get 5 people to commit to it. So please email me if you have any interest in attending, any questions. If you want me to refer you into John's folks, so we can get you set up and try to get you those free hotel rooms. And then lastly, here's my email address. Y'all have a great week, and we'll see you soon. Trade safe, my friends.